All right, welcome to. Fuck, didn't even make a video for like so long. Anyways, fucking price has been real shit because of the war and Trump. But that's all good. I just took a freaking, not a break, but just like, you know, nobody's trying to trade that bullcrap. But anyways, this video is gonna be on liquidity, how liquidity works, and the draws on liquidity, how to find the right draws on liquidity, like where price will go. So I'll be using FX replay. I can't trade my favorite NASDAQ and ES because I don't have the subscription for this, but I'll be using NAS 100, which is booty price action, like as you can see here, booty price action. But anyways, all right, let's get into some liquidity. Okay, let me just find where is it. So I think I taught this in the last video, fair value gaps and stuff. Basically, when price is, you know, obviously moving, making these higher highs, lower lows, higher highs, lower lows, higher highs, right? That is basically just liquidity there. So you would mark out the lower lows because these haven't been tapped yet, right? This one hasn't been tapped out, this one hasn't been tapped out. All right, that one's been tapped out, this one's been tapped out, right? So you don't need to worry about these tapped out ones. You need to worry about, you need to like mark out these key points here, these lows that haven't been tapped out yet, because eventually price will do something like this and then start attacking those lows. So if I just delete this and then show an example here, you see how price is going up, man. It's attacked, it's taking out this high, just drawing out the highs, right? This is liquidity. That high, eventually you'll probably take it. And yeah, well, that's how you know price is in an uptrend. And if you need a better like chart display, whatever, go onto the line chart and you see simple as just, you know, that's a normal uptrend. Then you would want to mark out, you know, the ones that haven't been hit yet. That's been hit already, but you want to mark out the ones that haven't been hit. That's been hit. This one has been hit. So because these ones got hit here, right? This one got hit here. All right, the ones that have been hit, you don't need to worry about, but know that they've been taken out. All right, which means eventually price is now going to, that now means price eventually is going to try to take out these highs here. These highs will be taken out later on, but that all depends on how the market is and stuff. That's why you got to use fair value gaps to find the right draw on liquidity. See, now eventually what's it aiming for? These highs here. So now we can just switch our bias to high and just go just like that. And our target, let's go that high. Oh, 42K, let's see what happens. Anyways, and then I'll put it below here, target that high. And I'll target this high probably. Yeah. Oh wait, this is some bad price action. Check the hourly. Ew. Yeah, I thought this was gonna happen. Anyways, we can tell this is bad price action because consolidation. It's at a sideways market right now. All right, if I drop this a little lower, because watch this shit. This is how you deal with shitty price action. 30. Okay, so right now it's trading into a inverse 30-minute. So if I get rid of this 1 hourly here, just to clean up the chart, there's this 30-minute inverse here that's holding price. This is definitely gonna go up. Definitely. It's taking out a lot of lows. It didn't want to take out this low here, right? It's made a lot of highs here. It hasn't tapped this or this yet, right? It's inversed a lot of the bearish. So then I'll just play again. Boom, just like so. So yeah, that's how you find draws on liquidity. You just, I don't know how else to explain it. You just, that's how you do it. So yeah, that's it on that. The next one will be on AMD, like my favorite AMD. This is what like gets, this is what like, that's not strat, is it a strat? I don't know, but that concept is like really good. So yeah, that's it for this video. I'm gonna try and make another one. So yeah.